Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin. We will stop and look at our Elliott wave counts. We have 3 different ones to look at. But before we do that, we're going to do something different. We're just going to step away from the Elliott wave count for a moment. We've been consolidating for several weeks. There's a lot of confusion at the moment. There's also, as usual, a lot of certainty from some people. We're going to the moon, we've bottomed. Oh my god, it's the beginning of the end. When price action is as neutral as it is currently, this is when I tend to be also at a neutral state. So I want to take a step back and look at some of market geometry, some basic things I want to put into place to get some context, to kind of frame the current price action so we can get some clearer understanding of what might be going on. So we're going to do that, then we're going to have a look at the counts. Now I would ask you not to skip this part of the video and hurry on to the counts, because I think this will help, like I said, frame what we're going to talk about in a minute. So first thing I want to talk about is the premise that we've been working on since the 2018 low is that this initial swing is a 1 and a 2, and now we're in a 3 into a 4 of some sort before we head higher. This is the general theme of the Elliott wave count. We've got counts to get us down to here. We have that expanding flat with a rather overextended C, which I'm not particularly happy with, and we also have the ending diagonal into a zigzag, which is yet to complete and to move lower, probably what I'm more leaning into at the moment. So let's just try and get some basic geometry on the chart here to get a framework to work with. I've got a bunch of things here I want to just throw up. So the first one is our long-term pitchfork based off of this assumed 1-2 pivot off of the 2018 low, which led us to the highs at 65,000 from what, 3 grand-ish, 3,100. So a gigantic move. And a huge 1-2 swing within it, what we're now assuming is perhaps a 3-4. Now, the first thing you have to notice is we're just hanging around the median line of this pitchfork, and we have been for quite a while, a few weeks now. You can also see how if we bring up our fixed volume range based off of our wave 4 of lesser degree projected forward in time, you can see we're just hanging around our point of control on the volume profile on this fixed volume range here, and we have been determined every week to body a candle above it. Okay, that's literally what we've been doing while we've been hanging around this median line. Here's our point of control, and we have bodied every candle above it. We had this hugely bullish hammer here, right? Huge wick to the downside with a tiny body above it, desperate to get back above this level, but we haven't seen any follow through since. It could still come, but the longer we spend here without bouncing, the more suspicious I'm getting, essentially. So this is one of the things we've been consolidating around. Now, this happens to coincide with my 60 exponential moving average on the weekly time frame. Now this, unlike the point of control where we can see the body of the candle is what matters, we can see that we've had a wick to the 60 and another wick to the 60, and that bullish bounce was a wick through the 60 and a rejection back to the upside to get us above this point of control, keeping us around this median line. Now this is all in play, still in play, and it is not resolved yet. So I think trying to call the perfect Elliott wave count at the moment is a bit of a futile experience, because until we see a break one way or the other, we can't have any great certainty about what we're looking at. So sorry if that's a bit of a cop-out, but we end up in these circumstances sometimes where the ifs, buts and the maybes are based on more than just sticking labels on a chart, and in this case we can see the main things in play are the median line of this pitchfork, this long-term exponential moving average, this point of control, but it doesn't just stop there. So let's back away from the pitchfork and the volume profile for a moment and make things even simpler. So let's just put a channel, and here's what I made earlier, around the price move off of the low. So this is the idea that we're taking the top of the 1, we're making the assumption our 3 is in, but we've gone 1 to 2 to the top of the 3, and now here's the bottom of the channel. So let's just assume for a moment, that the bears are right in the short term. I'm not saying they are, but let's just assume they are for a moment, and we're going to break down. Right, so the next thing we need to know is the height of our proposed wave 1, because remember we're saying this is a 1, this is a 2 inside the channel, this is a 3 to the top of the channel, this will be a 4 to the bottom of the channel, this will be a 5 back to the top. Okay, and we're just going to go 1 to find the 3 to find the 5, and let's assume that basic premise is correct. So we need to know, here's our invalidation point. Wave 4 invalidation point. Now I've saved this chart as Bitcoin naked because the whole point is we haven't got a count on here. So we're just looking at the geometry. We're just looking at the basics. But sometimes getting away from the Elliott count for a little while can really help clear your head, because if you're not getting anything from it, then it's worthless analysis. You know, I'm a huge Elliott wave fan, obviously, and I think it has a great value to offer, but if you're not personally getting anything from it in your analysis over a weekly or monthly or daily time period, drop it and go look at something else. You're not obligated to trade this, alright? So you don't have to. There's hundreds of thousands of assets in the world for you to go and trade if you're stuck on anything for a short term, long term, medium, intermediate term, whatever it is. So what we can see here is the invalidation point. Obviously, just like with the pitchfork, we're hanging around this median line of the channel. So it's all about this area here, consolidation. Are we going to bounce? Are we going to break down? The longer we spend here going sideways, the more I feel that we're going to break down. Because after putting in such a bullish candle, we haven't bounced. I'm not saying we can't, we could still do it. Now there's one other pitchfork we'll look at when we come in on a smaller time frame in a minute, but let's just assume we get a flush down to the edge of the channel, to here, somewhere between the invalidation point of 14 grand, and depending on how long it takes to work our way down in 5 waves towards the end of the year, anywhere between that 14 grand and maybe, if it takes forever, 20 grand maybe, test of the previous high. So let's just pop that on there as well, because I think that could be significant. So the 2018 high. So depending on how we get down here, and there's a multitude of ways we could do it, we've got the lower, put this in red so we associate it with invalidation. So the lower red line is the invalidation point for our wave 4. So how could we come down here? Well, we may have, let's come down to the daytime frame now that we're looking at things that slightly clearer way. So, oops, excuse me, just delete that. Right, so have we got a completed impulse wave down here? Is this a 1, 2, 3, 4, 5? There's a strong argument to suggest that this is complete. That you've done that you've done 5 waves down here. So this could be, keeping things super simple, the A. Now we're going to put in a B, and then we're going to put in a C. Okay, doesn't have to come to the bottom of the channel, could come to the bottom of the channel. B could be an incredibly time consuming wave, and we could end up out into next year. Who knows? With a long C, we could come down quickly to the edge of the channel, break through the previous all-time high, but still not invalidate the count. It's all up for grabs here. Or we could do somewhere in between the two, come to the edge of the channel, test the previous high, come not really that close to within $5,000 of invalidation, but nowhere near it really, and just work our way down like this. So let's say we get an A here, we get a zigzag into a B, and then we work our way down 5 waves like this into a C, and this takes us out into next year. This is one possibility. Okay, that this is an A. Another possibility that we'll look at in more detail in a moment, I did not mean to delete that, let's bring that back up, is that we have our expanding flat pattern. Now, not particularly popular, because if you go past the 1.618 you should be suspicious that it's not a flat. I accept that, but there's no hard and fast rule about exactly where the cutoff point is. It's just more about how it looks. So let's have a look at it with our other pitchfork. So you'll see here a whole of a bunch of confluence. Let's just hide the channel for a moment, and we don't need that ABC. So this is the idea that we have been in an expanding flat pattern. We've gone A, B, C, and we're done. And this was 5 waves in a C. 1, 2, as I just drew it a minute ago. C, and now we're going 1, 2, 1, 2. I don't know, 1, 2, 3, 4, 5, whatever. And that we're just consolidating bullishly down here, building a base before we break out. So let's look at what's ahead of us. Regardless, we know that if we've done 5 waves down in an A, we're coming up in a B anyway, and it doesn't really matter. We will probably retrace somewhere between 38 to 50 or 61.8% up. So assuming for the moment the bottom is in, we've got obviously the median line of this channel. If this count is correct, is going to be resistance anyway that we have to break. But we've got the 50 here, and we've got the 61.8 here, and we've got the 31.8 here. These are all perfectly acceptable retracements for a zigzag. So this one we'll colour these 38.2. This one was the 50, which we used the light blue for, which is that one, I think. I don't know. And then the golden ratio. So we now know what these lines are. Let's just lock them in place. And we're just going to try and keep things simple in the meantime. So you can see how this pitchfork has played, you know, has had a pretty strong relationship. So there is an argument to suggest this is a pivot low, pivot high, A, B, expansive B, 5 waves in a C, because tested the median line here, tested it to the tick here, tested the outer bound of the pitchfork perfectly here, flush through the median line, no body of any candle below the outer bound, and the 61.8% line here is our downward support. It's just like we keep bodying candles above it. We haven't come back below it since we've had this move up to here, so this could be a 1-2 before we break higher. So these are the levels you're going to be watching. You're going to be watching the median line here. Does this prove to be further resistance? If this count is correct and we bottomed, it shouldn't be. We should move through this and start testing these higher levels. Okay, if this count is wrong, which we'll look at briefly in a moment, then we will flush down lower, or we're going to move that 3-wave move into the B. So we're still checking the same levels. We're still looking for the same levels. Even if we're impulsive, we're looking to test resistance. If we're corrective, we're looking to test resistance before flushing lower. It's all part of the same thing. So is this the pitchfork I'm clicking on? That's locked. So let's just hide this out of the way. So you can see how this has confluence, median line, out of bound, median line, out of bound, 61.8. This has confluence, along with the long-term pitchfork that we're sitting around, along with the 60 exponential moving average, along with the channel. You know, it's all there. So I still have a lot of confidence that this is a wave 4, that we are just channeling, and it has potential to go a lot deeper. Admittedly, it has potential to go a lot deeper, but that doesn't mean the end. That just means completion of consolidation of the wave 4. So I think you're probably going to hear it all over the next few weeks. If we bounce from here and we start impulsing, and this goes 1-2, 1-2, and we go through all of these levels like a hot cheese wire, you know, and we just don't stop, and we just smash our way to new highs, then we can say, yeah, this is a pretty rare expanding flat with an overextension in the C. However, odds are, with the length of this C being as extreme as it is, I feel it's probably more likely that the ending diagonal was correct. This is 5 waves into an A. We're looking for a retracement of a B into this area here. Sorry I can't be more specific, but it's just, you know, we're hanging around this point of control, we're hanging around all this confluence until we get a break, some kind of move. We're just kind of you know, doing our best to put down some estimates. So a move up into here, some kind of move into this territory, and then we'll start impulsing down again to get that completion. Okay, ABC. That's probably what I'm leaning towards. So now that we've done this basic analysis, I say basic, but I do think it's got quite a lot of value to it, so I hope you've stuck around and watched it. We can see all the levels of confluence which support the idea that we're still in a greater impulse on primary degree. The wave 1, the wave 2, the relationship between the two, the pitchforks we've looked at, the median lines, the point of control, the lot. So if we do flush down and we flush down violently in the next few weeks after retracing into a potential wave B, or maybe we flush down from here, who knows? My personal opinion would be, don't let it rattle you. Don't let it shake you. The the bullish interpretation, the long-term bull market is a long way from being invalidated or broken at a structural level. It's still structurally intact. It's just my opinion, not financial or trading advice. Okay. So right, let's come over and have a look at these counts and then we'll wrap up. I know it's the unusual way around, but I didn't want to flood you with loads of potential counts before framing it in a more basic framework, which I think honestly is offering more value at the moment. So this is based on the idea of our expanding flat that we were talking about a moment ago. ABC with a long C down. This is assuming we're complete. Okay, so 5 waves down with pretty nice symmetry. No overlap, nice clear impulses. We get this rather complicated wave 4 with a WXY with a subwave ABC with a triangle in the B. This is quite tricky, but this was actually essentially an ABC zigzag with a B triangle of a greater ABCW, ABCX, ABCY. And so we get this complex wave 4 and then we get a pretty clear impulse down. I'd argue. Pretty clear impulse down, 1, 2, 3, 4, 5, broken it all the way down to macro level in terms of subwave degree. And then we come to a bottom, we get that big reversal candle on the weekly time frame, big bullish candle, and then we're saying essentially 5 waves up into a 1 here, so that needs to be moved across, sorry. A, B, C into a 2, and then another 1, 2, 3, 4, 5 wave move into another 1, and now a load of sideways shit. Yeah, and I'm not being trying to be facetious or anything. It's of no use to anybody really at the moment, and I've slapped counts on it, and then I've taken counts off of it, and then I've slapped them back on, and it's serving no real purpose at all at the moment. We need to see a break one way or the other, and I'm not happy sat here wasting my time mucking about with this. So 1, 2, you could say 3, 4, 5. Alright. So then you could say, what the hell is this? Is this 5 waves? And this 3 waves? And this 5 waves? What on earth's going on? Is this an A, B, C? We've done some kind of running pattern into a 2. So we've gone 1, 2. Well, in that case, we should flush down violently and get moving now. Alright, well, what if all of this move was simply corrective? A, B, C, A, B, C, B, and now we're going to move up to complete the B. Essentially, until we get out of this and see some resolution of this, break down, break up, you can label it any way you want at the moment, and you're not really getting any particular value. You are probably getting more value from looking at the basic shape at the moment, which I would argue resembles a bullish flag. A 5 wave move up and a consolidation before breaking higher. So this could be our A, B, C up and then break down. Who knows? At the moment, like I said, I'm more concerned and interested in the overall geometry of the long term than I am trying to pick my way through all of this. So let's come on to the next count. Now this one is the idea we just finished on there, that rather than having bottomed, which the previous count suggests is possible, it is possible, likely or not, I don't know. This suggests A is done, 5 waves, B up into our target, down for a 50% fib retrace, above the invalidation point, below the previous high, into a deep wave 4, bringing us to the bottom of that long-term channel. The longer we push this out, the higher we can set the price. We don't have to come all the way down here. We don't even have to test the previous high. It depends how long we take to do this correction. Okay, so that's the other count, which is the idea that this is a zigzag. A 5 waves, B 3 waves, coming up into our target zone on our chart here, and then breaking down again. And then finally, we have the idea which things are even more bearish in the short term than expected, and that we have not completed the initial 5 wave move down into an A. We will get a significantly deeper B retracement, and then we will wrap things up with a C in the months to come. It's essentially an ABC, but with the A incomplete. My least favourite of the counts, to be honest, because I just feel that nothing here, since doing our so-called 1-2, is impulsive to the downside. Like I said, this looks more like a bullish flag structure likely to break up. No certainty at all of that, just looks more like it to me. And therefore, the idea that we've gone 1-2, 1-2, and we're about to break down, if this is the case, we've got to do it ASAP, and we've got to get moving down super fast into this wave 5. Doesn't have to be anywhere near this deep, but given the initial move, we would assume it would be at least this deep. Just projecting our 1 from our proposed 2 to find the 3, to find the 4, to find the 5. My least favourite of the 3 counts, I think if I had to pick, and like I said, at the moment, until we break one way or the other, haven't really got the foggiest, it would be this one. We've come down in A, we're going to come up in a B, somewhere into our targets, and then we're going to break down again. And all of this still keeps the market intact with all the things we've looked at on our naked chart here, our channeling for the market, our pitchfork, our fixed volume range, all of these things which help support the idea that we're just consolidating before flushing down, testing the either testing the previous all-time high or breaking it and staying above the invalidation, but still channeling nicely and still trading within the pitchfork nicely. So that's it, guys. There's no point doing any basic analysis here really. At the end of the day, we spent the start of the video doing it. We'll just bring up our RSI and have a look at that. Tell you what, yeah, alright, and let's do our usual routine to wrap things up. So, sandwiched between the 10, the 20 and the 60 exponential moving average, with the 10 having crossed over the 20 but not over the 60 yet, with the price below it. Until you see the 20 through the 60 with the price below it, that would be traditionally what we call a death cross on the weekly time frame. The biggest death cross would be over the 250, but you know, we haven't seen that at any time yet, so this is still a possibility. And I think if we do complete an A and then a likely retracement into a wave B before coming down in a C, let's get rid of that, that's confusing, then yes, you would probably get a death cross on that time frame. We have yet to move into oversold conditions on the weekly time frame. We've got very overbought. We haven't done a round trip to oversold, so this could be suggesting that we need to complete that round trip with an A, B, C into oversold before breaking higher. Doesn't have to happen. The other count could still be correct. Way above our 250 on this time frame. Okay, the MACD cooling off the bearish momentum. We had these dark red bars on the weekly. We've been cooling off ever since. Still below the zero bound, with the short-term moving average, long-term moving average down to the zero bound as well. No sign of a bullish crossover to the upside yet, but a cooling off of bearish momentum, but fitting the idea that we're just consolidating. So if we now come down to the daily time frame and have a quick look. Alright, why is the volume profile still here? Did I not notice it? Okay, so below, or trading around the 10 and the 20 exponential moving average on the daily time frame, about to get that more significant death cross on the daily, which is the 60 through the 250 with the price below it. So are we waiting for this to make the decision? You know, as I've said before, these long-term death crosses can be synonymous with actually pointing out a low, a bottom, and then trapping a lot of potential bears down here is a possibility. If we get this death cross and then we violently break down, we've got our answer in the short term, at least, that we are moving lower. A lot of positive divergence on the RSI and the MACD on this time frame. We'll ignore this low to higher low here, but we've got a low to lower low here, and a high and a low to higher low here, high to lower high, higher low here as well. No follow through yet, even with all this bullish divergence. So this is what's made the count tricky at the moment. A lot of conflicting data. So there you go, guys. We'll leave it there. My advice would be, if you're a long-term investor, Bitcoin hodler, or even a long-term swing trader, the long-term bull market still appears to be totally structurally intact to me. Yes, we could see a significant fall in price over the coming months. If this is an A into a B and a C, that is probably the count I'm leaning into the most. I don't think I would be convinced otherwise until I saw a move through all of this. If I saw a move through all of this, and I get a nice, clear, impulsive move up of 5 waves, and I see a 3-wave pullback, and then a reaction, bump, bump, then I can start getting much more confident. So I've kept it really simple for myself. I'm not trading this at the moment in this range until I see something clear. My long-term accumulation of Bitcoin, the same way I accumulate precious metals, has been going on since we made the low. Could have lower lows to come. I will accumulate more if so, but I've considered this whole period to be an accumulation opportunity, and if I get one at a lower level, that's fine. But for the moment, over the short term, I'm not interested in trading this until I see something. Something to confirm my suspicions one way or the other. So, alright then, guys, please go back and watch the start of this video to get your head around the overall framing of the market, because I do think that should be priority at the moment, the long-term picture. You don't have to agree, that's fine. I hope to come back to you with some more detailed counts on this once we get a reaction and I can make sense of it, but I'm not just going to throw labels on unidentifiable price action just because it could be such and such. Okay, if you're new to the channel, you like what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to, hit the little bell notification icon to remain informed of future video releases, and thank you as always to my patrons. Your support is greatly appreciated. If you're interested in becoming one, please follow the link in the description box below, and if you're not following me on Twitter yet, there's also a link to my Twitter feed. Alright guys, take care, and I'll be back with you later in the week with more assets. All the best, bye bye.